I think we have quorum, so we can get the meeting started. Welcome everyone to the Audit Committee agenda. As outlined, we'll start off with the 2016 audited financial statements, and there's a quick presentation. Sherry, if you want to start, and we can go from there.
Great. I'm pleased to be here today to present the 2016 annual financial report. First, I will provide a bit of a background to allow for a better understanding of the consolidated financial statements. I will then provide a high-level overview of the city's financial condition. After that, Matt Beddick of KPMG will present the findings of their audit. As a reminder, accounting staff prepares the city's consolidated financial statements in accordance with Canadian generally accepted accounting principles as established by the Public Sector Accounting Board. For your reference, explanations for significant variances for the 2016 consolidated financial results have been included in the financial statement discussion and analysis section of the annual report, which starts on page 10. The consolidated financial statements combine the results of the tax-based operations, the various city enterprises, local boards, capital activity, and reserve fund activity. They also account for the two government business enterprises, Kitchener Power Corporation and Kitchener Generation Corporation. Local boards include the Centre in the Square Inc., Kitchener Public Library, Belmont Improvement Area, and Kitchener Downtown Improvement Area. So the format of the financial report presented to Council in March for the tax-based and enterprise operating results is significantly different than the format required for the annual audited consolidated financial statements. We thought it would be helpful by way of the next two slides to walk Council through the difference in the annual surplus on the statement of operations in these consolidated financial statements compared to the operating results that were provided to you in March for the same time frame. This comparison equates from $52 million in the consolidated statements to the $3 million that was presented in the March results. The consolidated statements contain the operations and entities that I listed out in the previous slide. Further adjustments are then made to these results to have them reported in line with the standards set out by the Canadian Chartered Professional Accountants Public Sector Accounting Board, or PSAB. The largest adjustments required to comply with PSAB relate to the city's tangible capital assets, or TCA. The statement of operations includes the revenue streams that were used to fund the creation of the assets. However, the expenses incurred to build or purchase those assets are excluded. The cost of the TCA are added as an asset on the statement of financial position, and these assets are then expensed each year by dividing the cost over the useful life of the asset. This expense is referred to as amortization, and you will see it here. Transfers from operations to capital or reserve funds and transfers from capital or reserve funds are removed in the consolidation, as these are an expense to one fund and a revenue in another. Given the consolidated financial statements are adding all funds together, these expenses and revenues offset. There are a variety of adjustments required to comply with PSAB reporting. The largest of these is the fact that debt repayments, both interest and principal, are treated as an expense in the operating results, whereby PSAB only allows interest payments to be treated as an expense. So what does all of this information mean? The accumulated surplus of $1.28 billion on the consolidated statement of financial position is not a surplus as you'd be used to hearing of in regards to the operating results. These are not dollars available to be spent. They are a representation of past investments that the city has made that continue to provide benefit to the city going forward. This includes things like tangible capital assets, investments in Kitchener Generation Corporation and Kitchener Power Corporation, and reserve funds set aside for specific purposes. To clarify, investments in tangible capital assets makes up $1.07 billion of the $1.28 total in accumulated surplus. This in turn is made up of thousands of individual assets that will continue to provide benefit to the city for a number of years. In the previous two slides, we saw that the largest impacts on surplus are those related to tangible capital assets. The net book value of TCA, which is the cost less the accumulated amortization to date, has experienced modest growth over the last 5 years. With the exception of 2015, each year the net acquisitions, or additions less disposals, have exceeded the amortization expense applied in that year. The key on this slide is the net book value as a percentage of costs has remained steady at about 68%. If this percentage was dropping significantly, it would suggest that the city should look into its asset renewal programs. The next few slides will present a high-level overview of the financial condition of the city. Financial condition speaks to the city's ability to finance its operations on an ongoing basis, regardless of economic changes and changes in other environmental factors such as growth within the city. The chart on screen shows the 5-year trend in the overall debt balance for the city, broken down between the various types of debt. A good news story is that the municipal debt continues to decrease from its peak of $112 million back in 2013. 2013 was the last year new debt was taken on for the EDIF program. Debt balances are expected to decrease for the next number of years as the EDIF debt continues to get paid down. Net debt per capita, after removing amounts recoverable from enterprises and others, is the lowest it has been in many years. This can be seen on page 140 of the annual financial report in section 8 of the Financial and Statistical Review. This chart shows the 5-year trend in the consolidated reserve balances. As can be seen in the graph, the balances have been increasing since 2012. Council passed a consolidated reserve policy in 2012, which provides a framework for building up reserve balances and ensuring they are used as intended. The next couple of slides will provide a bit more detail about the various types of reserves and their balances compared to their target levels. One of the components of the reserve fund policy was categories for improved reporting. The 5 categories shown on this slide were used during budget discussions, and the next slide shows the 2016 closing balances within each of these categories. The top line of this chart shows the actual 2016 ending balances for each of the 5 reserve categories. The middle section shows the target ranges for the reserve categories and how well the reserves meet the minimum target. The bottom section shows the actual 2015 ending balance by reserve category and the change between the 2 years. I will draw your attention to the far right total reserve column. Here you can see the total ending reserve balances in 2016 were $64.6 million, which is 65% of the minimum target balance of just less than $99 million. This ending reserve balance is up from $58.3 million at the end of 2015. This chart groups all similar reserves into one category and calculates the percentage of the minimum for the full category. There are certain reserves within a category that would be funded above their minimum target that are offsetting those that are below their minimum target. So, in summary, an additional $76.2 million would be needed to ensure that every reserve met its minimum target balance. So although there was some improvement in the overall balances in reserves, the city is far from being in line with even its minimum target reserve balance, and the percentage of minimum target has fallen from the previous year. Some improvements have been made in increasing the stabilization reserves, but these reserves continue to be well below their recommended targets. This exposes the city to various risk factors, one of which is weather volatility. This graph combines the city's debt and reserve positions together. Rating agencies consider a debt-to-reserve ratio of 1-to-1 to be financially prudent, which means the city would have $1 in reserve for every $1 it holds in debt. As can be seen in the chart to the right, the listed comparator municipalities all hold more in reserves than they do in debt, with the exception of Waterloo and St. Catharines. The city's ratio is about 1.5 times that of Waterloo and about 6 times that of Cambridge. At the end of 2016, the city has $1.55 in debt for every dollar in reserve. This shows much improvement from 2012's level of $3.18 in debt for every dollar in reserve. The magnitude of the city's debt load can largely be attributed to EDIF and was known before the 10-year program was approved. The final financial measure to be presented is also the most complete picture of the city's financial health. Financial position per capita is determined by subtracting total liabilities from total financial assets and dividing by the population. This measure shows if the city has enough cash and investments available to pay everything it owes to others, including its municipal debt. Looking at the chart to the right, the value of 872 at the end of last year, 2015, is positive, which means that Kitchener has more than enough assets to meet its obligations. It is also close to both the average and medians of this sample, so Kitchener is comparable to those other municipalities. Just as a reminder, the comparators are always a year delayed because we need to wait for all of their information to be brought forward. So finally, as shown in the graph to the left, Kitchener has kept a fairly steady position over the last 5 years, which shows that even though debt levels have been high, the city is not in financial peril. The city's financial position is getting increasingly better. This trend will continue, provided the city limits new debt issuance to only that which is already planned for in the 10-year capital forecast, and by allowing debt levels to fall as the EDIF debt matures. The city should also continue to build reserve balances. This means not drawing on existing balances for usages other than what the reserve was created for, and continuing to make strides to see reserve levels brought to at least their minimum target. Also, continuing to hold long-term investments provides investment income and cash flows year over year and benefits the city's net asset position. I would now like to open up to any questions.
Okay. Are there any questions? Councillor Fernandez.
Thank you. When I'm looking at the reserve reporting on page 1-15, the total program-specific reserves, that, can I say, is that the, what makes up that whole program-specific reserves?
I have to refresh my memory, but I have it here. Program-specific includes things like economic development, election, Oktoberfest,
Okay.
public art, community loans, and activity.
Okay, I can see that graph in my head. So we're definitely in a really good position in that reserve area right now, because we're above our, we're just below our maximum.
Just of note, there are, most of those reserves don't have a minimum attached to them, so that in and of itself will lead to that ratio being significantly higher.
I'm sorry, I don't understand.
The minimum target for the bulk of those reserves is 0, so as soon as you have anything above 0, you're above your target. So.
Okay, I see what you're saying. And I heard what you said when you said that, you know, there are some that are below, and some of the, so it's good. What we're seeing is an averaging out then of all of the reserves when you're talking about the total reserves of being 64 million.
It's adding a number of different ones together, so there will be some that are above and some that are below, which doesn't lead to an exact average, but isn't just taking everything to get to its minimum.
Mm-hmm. So our stabilization reserves still sitting quite low. How does that affect our tax stabilization reserve, or our development charges is separate out from that, isn't it?
Development charges would fall into...
I see that it has its own little category.
Yes.
So the stabilization reserves would include like our tax stabilization fund,
all of the
our building.
enterprise,
Our building is in capital, isn't it?
there is a building capital as well as a building enterprise stabilization.
Okay. Is there concern that that stabilization reserve is lower than it should be?
Council has gone through the process to set their minimum targets, so anytime a reserve is below their minimum target, it's a concern.
I think what I'm really understanding here is, though, even though it is below, it doesn't necessarily mean that we're in a dire situation, because at least we have some reserves. We have some money that we can draw on. Is there ability to not cross-pollinate, but a stabilization reserve is a stabilization reserve. It doesn't matter what category it's in, or I know that Mr. Chapman has said before, we don't raid from one reserve to another, but if it's in a stabilization, we still don't raid from one to the other, do we?
That's correct.
Okay, all right. As far as
Mr. Chapman, did you not anymore? Okay, go ahead.
Okay, as far as our debt to reserve ratio, to me, that number is a bit more concerning. And how would we proceed if there was an opportunity to incur debt for an asset or something like that? Would staff be saying, no, we're already way too far off our debt rate to reserve ratio, and we would really recommend that we don't incur at all any more debt? Or is there a certain amount of debt that could be considered?
Within the 10-year capital forecast, there is some new debt planned to be incurred, and I think the recommendation based on past council decisions and wanting to bring that ratio down has suggested that continue with the planned, but don't necessarily bring on more unless a decision is made at that time that is of benefit.
Okay, good. Thank you.
Councillor Gazzola.
Actually, I have questions on the other parts of the financial statement when we get to that.
So you mean after the auditor, or?
Yeah, the auditors are going to do something.
Yep.
I have some questions on
Okay.
last year's experience.
Okay, I'll come back to you. Councillor Yanetsky.
Yes, thank you. Understanding the surplus, you sort of went through an explanation there, and I don't know whether I caught all of it or not, but maybe you can help me understand, because you have a statement in those 2 pages saying that revenues or expenses do not include operating surplus. Why is the operating surplus not included? I don't know the rationale for it, and how much surplus is there?
Sorry, I'm not sure why you're saying the operating surplus isn't included. It is, in fact, included.
Well, it's on pages 17 and 18, sort of the subtopic. It says revenues not included in operating surplus, then goes on to the next page, expenses not included in operating surplus, and I'm just trying to understand that.
Sorry, can only hear parts of the question.
Okay.
So the revenues that are not included in operating surpluses would be things that are flowing through either our capital funds or through our reserve funds. So when you receive the results of the operating and enterprise results in March, that's just the tax base and the enterprises. It doesn't include the reserves and the capital. For these consolidated statements, all of those funds get added together. So this is just identifying things that weren't included in March that need to get included into these consolidated statements because we're adding things like capital and reserves, primarily.
So how many dollars are we talking about, or is that just sort of a fluctuating figure?
In any given year, the capital spends can be different. We do have the capital forecast, and we're seeing those flow through, this expenditures flow through the capital forecast. So there is dollar amounts included here, so I'm not sure I'm fully understanding your question.
Well, maybe I can't ask it correctly because I'm trying to understand what it's about, but it's okay. We can maybe do that afterwards. The other question I have pertains to municipal debt. And the Edith Fund was the peak of the thing, and it's decreasing as each year goes by, a good portion. There's also a component of the tax in the enterprise, and I've noticed that the tax in the enterprise is slightly decreasing every year. Is the objective is to reduce that down to zero, or do you always want to have some municipal debt?
Mr. Chapman?
Through the chair, under the current philosophy, that enterprise debt will disappear in time. That's relating to special projects. The most recent one was the odd expansion that the Rangers are paying for, the auditorium expansion.
Okay, yeah.
So there was a project that had a business case. We funded it with debt. The Rangers will pay off that debt, and then that debt will be extinguished. Under our current philosophy, the very bottom bar, the tax-supported debt, will be with us in perpetuity. So every year as debt matures, we issue new debt in a similar amount, which is why that bar is fairly constant across the 5-year forecast. Later this year, Ryan Hagee is going to come to you for a discussion around our long-term financial plan, and one of the questions that we're going to explore with you is what our debt philosophy should be. Is it desirable that we should move to a pay-as-you-go approach? Or the very question you've asked, is there some value in having debt continue to be a part of a program on an ongoing basis? So this reflects the current philosophy. Council may very well change that philosophy when we come forward later in the year.
Okay, thank you.
Okay, those are all the questions we have. Thank you. Okay, go ahead, Councilor Gazzola.
When we're talking about surpluses, it's just a little, we have a bit of an equity in our insurance fund, and that's not really recorded anywhere, is that right?
Mr. Chapman?
Through the chair, I believe it's in the note disclosure, but it's not forming part of the consolidated results.
It's clearly noted, but
right.
Yeah, why do we not consolidate that?
That would be a technical answer. I don't know, Sherry, if you can respond to that now or follow up.
At a very high level, it doesn't fit the accounting criteria for being consolidated into our financial statements. But if you want more further details,
No, that's fine. It's a
that.
good thing. It's just another little package that we do. That's fine. Thank you.
Okay, thank you very much.
All right, so that concludes my portion of the presentation. I'd like to turn things over to Matt Beddick from KPMG to present their audit findings report.
Wonderful, thank you. Welcome, Matt.
Thank you, and thank you, Sherry. The contents of our report have been distributed in advance to the committee, and so we'll work off the presumption that the group has at least had a chance to skim through it. As per usual, I'll touch on some of the highlights or the required communications. We'd be happy to take questions throughout, but we'll be also happy to take questions at the conclusion of the presentation. So if I could direct your attention to page 22, where we have the executive summary. I want to highlight on this page that we presented an audit plan to this group back in the fall. There have been no changes to that audit plan, nor changes to the significant areas of audit focus. In terms of completing the audit, as typical of this situation, we have concluded all of our audit work, including receipt of legal letters, which we identified in the middle column as something that was outstanding when we first issued that report. For the benefit of the group here, we do issue inquiry letters to external counsel of the city with respect to potential litigation and claims against the city. And these are items that are outside of the insurance pool that Councillor Gazzola referred to earlier. There are no issues identified as a result of the receipt of those letters. In the draft financial statements that were presented in the materials, there is a copy of our auditor's report, which we intend to issue upon completion of the audit. It is a clean report. There are no qualifications or modifications to that report. If I can bring you over to the next page where we are required to discuss the risk of fraud in the audit, and we did identify this at our planning meeting in the fall. We did outline that we have a variety of procedures that we perform to respond to that risk, most notably using what we refer to as computer-assisted audit techniques to identify what we refer to as high-risk entries into the accounting records. And when we do identify those entries, we look at those in a great number of detail to ensure that the entries are properly prepared and reviewed and approved, that they are fully supported with backup and other supporting documentation, and that those entries have business rationale with respect to how they are recorded. It's a procedure that we go through each and every year, so it's not new this year. And I'm pleased to say, based on the work that we performed, we did not identify anything whatsoever that caused us even the slightest bit of concern. On the next couple of pages, we do identify certain areas from the audit that we feel needed to be brought to this group's attention, or areas where we believe there are significant or unusual estimation or judgment. The first item I will, just for your benefit, bring to your attention that there was a change this year in the way that certain obligatory reserve funds were accounted for. And so these primarily are the development charge reserve funds. And as you will know, you do collect development charges upon the issuance of certain building permits, and those funds that are collected are restricted in how they can be spent. They have to be spent on the items that were identified in the development charge study, which is supported by the bylaw. Historically, these amounts have been recognized as revenue as the amounts have been transferred out of that reserve fund and into the various project funds for which they're allocated. And typically in any one given year, the amounts that are transferred to the reserve fund and the amounts expended on those items are generally close. However, in the last couple of years, there were some significant transfers from those funds to the capital projects, but the capital projects haven't quite gotten off the ground yet. So in response to that, the policy or the methodology was changed to account for the revenue, to show the revenue in these financial statements only when the expenditures are actually incurred for which they're restricted. The second item on the note here discusses the CIS to SAP system conversion. So as you will be aware, at the beginning of the year there was a change for sort of the customer side of the system, and we did some testing to make sure that the data flowed properly and that the controls were still in place with respect to how the customers are impacted by the new system and the CIS implementation. No issues or concerns were identified there. The last thing I'll bring forward on this page deals with the gasworks entity, and while I may be getting a little technical here, it's important to note that purchases of gas from third parties and through the union system is basically done at an energy level in gigajoules. But when the city records that gas commodity purchase, it's then converted into its usable state, being cubic meters. A number of years ago, there was an industry standard conversion rate, but in recent times, that conversion rate has fluctuated a little bit. And that's primarily due to the deteriorating quality of heat value of gas within North America, primarily because of shale gas that's coming out of the U.S. Over the past number of years, the city held that conversion rate standard, but it became obvious that it needed to update that rate. And so that rate was updated during the year. It caused a slight charge on the gasworks entity during the year. Well, slight. It was about $700,000, not material to the city statements as a whole, but it was a change, and that change has been applied prospectively as it should be. On page 25, we do identify areas of critical accounting estimates, and these are in the areas of employee future benefits. And so in these cases, these deal with sick leave, WSIB benefits, as well as health and dental benefits that are provided to retirees for the period of time that they qualify. In all three of these cases, the city uses an external actuary to help determine these amounts. Our responsibilities are to look at the assumptions underlying the work that's been done, But I will be very clear, we do not recalculate the actuary's work. There's an agreement between the Auditing Association and the Actuarial Association that permits us not to do that. Having said all that, we don't see any issues or concerns with those amounts. And then lastly, to remind the committee that last year the city adopted the standards of PSAB 3260, which required every government and municipality to record the effect of any contamination on their own lands when certain criteria were met. No amount was recorded last year, and we continue to be comfortable that no amount should be recorded this year. Let me be very clear, though, we're not saying that there is no contamination within city-owned lands. We're just saying that the criteria that were required for recognition here have not been met, and that is quite consistent among many municipalities across the province. I think the last thing I will highlight is on page 27. Whoops, went too far. With respect to corrections and adjustments, as a result of the work that we did not identify anything that had to be corrected in the financial statements, so there was no corrections that were made based on the work that we found. And there were 2 or 3 minor differences that we did identify and quantify, but those were well below our materiality level set, and so therefore we're still in a good position to issue a clean audit report. So the slide here that talks about corrections and adjustments and the clean audit report is the sort of, I call it the 2 thumbs up that these types of groups are looking for from us. Just as I close the formal presentation, during the course of our audit we had full cooperation and access to the records and the staff of the city. We'd like to especially thank the finance team that's here for the work that they did in helping us with the audit, especially Sherry, who does the lion's share of the work with respect to the audit. And we couldn't have done it without them, so thank you. With that, to the chair, I'll see if there are any questions.
Wonderful. Thank you very much, Matt, for your presentation. And we do have some questions for you. Councillor Gazzola.
Yeah, generally speaking, this is a very good report. It's a clean report, I know, which is a good place to be. I just want to refer to the last one, 27. There was nothing that you had to talk with our staff, and they didn't miss a thing that you had to even talk about making adjustments? You said there were you didn't see any adjustments that needed to be made.
Sure, I can elaborate on that.
I'm just curious, was there anything at all, or are they totally perfect?
Well, an audit report does not strive for perfection per se, although that gives me a little pain in my side when I say that, but I get over that. We are considering things in all material respects. When we were here in the fall, we did discuss the concept of materiality, and within that materiality, we have what we refer to as a de minimis threshold. So we do not collect or aggregate differences that are less than approximately $125,000. So to the councillor's point, if there was an item that we identified for $10,000, well, we might mention it to staff. That wouldn't be something that we would sort of collect on an ongoing basis.
Do you aggregate it at all, or just deal with?
If it is below that item, we would not aggregate it.
Yeah.
Now, having said that, we may perform a certain type of test where we're testing, say, 50 items, and we would aggregate any differences within that test of 50, and if that exceeded that 125 threshold, yes, it would come forward. But if we found 2 items in that group that were 10,000 each, then they would not be. Yeah. Did that help?
No, that's fine. No, I suspected that was the situation, and I'm glad to hear that. And I also know that if you do have concerns, that you work with staff and then you work it out. So, the only concern I have, it deals with our WISB situation. During the year, we talked about some pretty big figures that we're going to be running into, and there's no indication, like you say, you can only check what the actuaries do, but is there should there not be some warnings here that we're we have problems there, or do we, or what is the story? Because midway through this year, we had a committee meeting where a lot of big figures were thrown out and very scary. So, and yet here we are, there's nothing mentioned. So I'm just concerned as to where we stand on that whole issue.
Mr. Chapman?
Through you, Mr. Chair. Council made that concern very clear through the budget process, and so the commitment that we made was, as part of next year's budget process, to report back with more information and a review. And so one thing we have commissioned the actuary to do is undertake a full valuation and then to also make recommendations to the city around funding levels. And so that's a much greater degree of work than they've done in the past. And when we have those results, which are being developed now, we'll share them with council.
What exactly would our auditors check at this point in the game?
So when the full valuation is performed, we will check the quality of the data that the actuaries were provided with. We check to make sure that was complete and accurate. We would look at the discount rates that are used in calculating that liability. And we look at other trend rates that are being seen in the marketplace. We have our own actuarial specialists within the firm that develop their own independent assessment of what some of these assumptions are, and we compare the actuarial work to those, look for outliers. We have in the past, I can't say for sure with the city here, but with other clients for sure, brought that information back to the actuaries and required adjustments. So that may be something that could happen through this next process, but certainly can't promise it because it hasn't happened yet.
Okay, when was the last update that we had on that from our...
I can't recall, but it would have been within the last 3 years.
Okay, so you don't give...
Yeah, December 14th.
Okay, and so it's due again for review when? A complete review?
Mr. Chapman?
That review is underway right now.
Oh, it's underway now.
And you'll have
so it'll be reported upon in 2017.
Even sooner. So through the budget process this fall, we'll bring the results back to council.
Okay, I just want to clarify too, public accounting firms don't express an opinion on that. You just express an opinion on what, dealing with that?
Well, we express an opinion on the financial statement.
Yes.
We don't provide, piecemeal opinions, so individual opinions on individual items.
Unless
that's subject to a separate engagement and a special report.
So if something were way out of whack, you would express an opinion on it.
We would require adjustment to the financial statements.
Yeah, okay. All right. Thank you.
You're welcome.
Councillor Davey.
Thank you. I have no concerns, actually. It is a clean report. I agree with Councillor Gazzola. I just had a question on the charges that related to gas. I just want to make sure I understand correctly. So the city buys at volume, but, sells at volume, but buys at energy per volume. So you're saying the amount of gas that we purchase varies in terms of the energy output?
I think that's accurate. If I could, yeah. It's you buy it using a certain measure, and the measure is energy output, right, which is typical for the industry. But you hold it, because it is a physical commodity, in a volume measure. And there's a conversion factor that gets used. And historically, that conversion factor was pretty stable, and it is still fairly stable. It's a minor difference that has happened in the last couple of years.
Okay, but you did say that, so we had a $700,000 charge, is that what you said?
That's correct.
Okay, so presumably then the energy output for the same volume has increased since...
Decreased. The energy output for the same volume has decreased.
Has decreased?
Yeah,
because there's more impurities in shale than, okay.
The quality of gas has deteriorated in North America.
Okay, thank you.
Okay, there don't appear to be any other questions. Thank you, Matt.
You're welcome.
Okay, committee, there's a recommendation before us on page 1-1. Somebody care to, Councillor Gazzola, you have a question?
I'm sorry. I didn't mean to jump the gun. I have some other questions on the...
You have other questions?
No, not on this, on the statements themselves. That staff will be able to answer, not for the auditor to answer.
Okay, but other questions you want answered now before we...
No, I'd say
Afterwards, like you'll privately talk to staff. Okay, Councillor, I noticed you had your hand up. You're moving them. Councillor Marsh? Second, thank you. Any discussion? All those in favor? Opposed? That's carried. And I just want to take this opportunity to, number one, thank our staff in the accounting division, and number two, our auditors for all the work that they've done in the preparation of these statements. I think it was last year or the year before that we actually won an award for our financial statements, and I think it speaks to the professionalism and dedication of both the staff team that we have here at the City of Kitchener, as well as our auditing firm, and so wanted to publicly acknowledge all of you and thank you for your great efforts. So thank you. Okay, we'll move on then to item 2-1, and Ms. Tasker.
Good afternoon. All right, so today I'm going to be speaking about 4 different audits, including the cost-benefit analysis of aggregates.
Hold on. Hang on, don't leave yet. Councillor Gazzola.
I thought we were going to look briefly at least at the financial statements.
Well, no, that was my point. Like, we've adopted them now. Is there something?
No, it's not they're adopted and they're...
Okay.
I just thought for interest's sake, well, I just...
Okay, Councillor Gazzola, can you talk to the mic?
Yes, I'm sorry. I will send my queries to staff.
Okay, thank you, and they'll make sure that they share the responses with everyone so that the information is shared.
Yeah, I will share my queries, and then hopefully staff will share the responses.
Okay, thank you. Okay, Ms. Tasker, we'll continue on then with your presentation.
All right. So as I mentioned, there are 4 audits that I'll be going over today: the cost-benefit analysis of aggregates, the physical inventory of tools, and then 2 status updates on previous audits, namely the CSD admin review and the Kitchener Utilities Operations Center and Corporate Contact Center review. Still in progress at this time is a comprehensive review of our revenue division. So I'll start off with the aggregates review. And if you recall, the city used to dispose of scrap materials from work sites at Battler Yard, and then the concrete and asphalt would be crushed periodically into aggregates for use in future city projects. When the new snow storage and disposal facility was built at Battler Yard last year, all of the aggregates had to be moved to the COF to make room for it. The crushing operation was temporarily halted until a decision could be made whether to continue with the practice or pursue other options for disposal and supply of aggregates. So the objective of this review was to do a thorough cost-benefit analysis of all of the options and make a recommendation regarding the most sustainable and efficient process going forward. So the review consisted of a literature review of all past reports, analysis and data, interviews with affected staff and senior management. Council was also given the opportunity to provide input, however, only 1 member chose to do so. We did a risk assessment of each option, including assessing the likelihood and impact of each risk. And we did benchmarking with other municipalities to see how they handle their scrap material and where they source their aggregate for projects. The review was conducted by myself, as well as the INS Manager of Service Coordination and Improvement, Melissa Ryan, and the INS Business Analyst, Alicia Bennett. However, it was a collaborative effort with lots of input and effort put forward by the various stakeholder groups, including operations, roads and traffic, engineering, Kitchener Utilities, stores, and fleet. One of the deliverables of this review was to clarify the sources and uses of aggregates and to confirm whether recycled aggregates could be used in city projects. Now, the city generates various scrap materials such as concrete, asphalt, and other debris through our normal operations. The majority of scrap concrete is generated through sidewalk replacement, removal of curbs, and removing of concrete pads from playgrounds. Scrap asphalt is typically generated through utility cuts and repairs to things such as catch basins, manholes, sewers, roads, sidewalk, and curbs. Now, the scrap concrete and asphalt can then be processed by sorting it and crushing it into a recycled aggregate product. It's important to note that both the sorting and the crushing need to be done in order to get a product that can be used, and the raw scrap materials cannot be used without this processing. Recycled aggregates, whether we've crushed them ourselves or have purchased them through a third party, can be used in most city applications. Now, there was confusion over this point when the tender report came to council last year, so I'll just clarify it here. We've since been in contact with a qualified person who has indicated that the recycled aggregates that contain any asphalt may not be used below the water table for any applications. Now, this is because of the high concentrations of petroleum hydrocarbons that exist in asphalt and that are not good for our groundwater environment. However, the recycled asphalt may be used as a road base or for other surface applications. What this means is that the specifications for any concrete aggregates that either we generate ourselves or that we purchase from third parties must specify that it cannot contain any asphalt. If this condition cannot be met, then we would need to purchase virgin materials for any applications below the water table. Recycled concrete can be used as bedding materials around sewers, gas lines, and water mains, to backfill deep potholes or holes created by utility cuts, or as base structural material for trail construction. And recycled asphalt can be used to backfill holes created by utility cuts and to repair gravel shoulders. I will note also that engineering projects that are tendered out typically have their own location to dispose of scrap materials and will supply their own aggregates as needed, rather than dumping them on city lands or using our recycled product. This allows the contractors to have more control over their cost, quality, and quantity for their process. Now, as part of this review, we asked stakeholders what they liked and didn't like about the previous recycling process at Battler Yard. As you can see by the chart on the screen, the recycling process was seen to be cost-effective and easy to use. However, there was a general lack of controls. In addition, the quality of the product and the hours of operation did not meet the needs of all users. So this feedback was taken into consideration throughout the analysis and recommendations for this review. As a first step in analyzing the various options, we mapped out what those options were. So I'll start at the top of this flow chart and walk you through it. Step 1 is in orange at the top, relates to the options that we have for removing scrap materials from the work site. We can either have city staff haul it to the COF or haul it directly to a landfill site. We also explored other options of city staff or third parties hauling it directly to a third-party site. However, neither of those options was feasible. Third-party sites won't accept unsorted loads unless it's on their schedule, and we don't have the ability to sort the loads on the work site. And to have them pick it up from the work site also puts us at the mercy of their schedule. So either way, we risk material piling up at the work site. Now, if we do haul it to the COF, we move on to step 2 in yellow, which we can either sort the material or not sort it. Sorting it involves separating the loads into their specific materials and removing any excess dirt or other debris. From there, we move to step 3 in green, which determines what we do with the material. If we've sorted it already, then we have 3 options, shown in the lighter green. We can crush it, or we or a third party can haul it to a third party site for recycling. If we don't sort it, then there are 2 options shown in dark green. We can haul it to a disposal site, or a third party can haul it to a disposal site. And finally, step 4 in blue is where we get the supply of aggregates. Obviously, if we've crushed the material in step 3, then we can use the recycled product. Otherwise, we need to purchase it from a third party, and it can either be new virgin material or recycled product. All of the options at each of the 4 steps that I just described were then compared against each other based on the following criteria. First was cost per ton and total cost, using 3 different volume projections. Environmental impact, which included considerations around greenhouse gas emissions due to hauling, as well as the ability to recycle. The degree of control that the city would have over the scrap material in terms of testing and final use. The impact on staffing and equipment, the relative amount of land required at the COF, other pros and cons, and the number of high risks associated with each option. We also used a standard evaluation matrix to compare all 11 combinations of options using the same criteria. There's a copy of the matrix in your reports. It has a combination of options across the top and the criteria down the side. Each criteria was rated for all 11 scenarios, with each receiving a score of 1, 5, or 10, with 10 being the best option. The scenario with the highest total score for all criteria represents a preferred solution. So all of the criteria were weighted equally, which is a standard practice in evaluation matrices that are used for environmental assessments. However, just for argument's sake, if we were to weight the cost, for example, or even the environmental factors more heavily, then the preferred solution still ends up being the same. So the results of our analysis show that the best scenario is to resume city staff hauling scrap materials to the COF, sorting it, having a third party crush it, and then using the recycled material in future city projects. This is because this scenario scored the highest in all but one criteria. It has the lowest cost per ton and total cost of all scenarios. It's also the best option environmentally because we are not double handling the material. The other options require transport away from the COF to dispose of the material and then more hauling to deliver supply of the material. This means the preferred option has less greenhouse gas emissions overall and for the city as a contributor due to less hauling. It also allows us to use recycled materials and means that the process is not taking up space at landfills. So this process will allow us to properly sort and test the incoming material and provide the highest level of control over where the material is used. We did note that regardless of which option was chosen, there will always be a need for a yard loader and an operator to help load and unload trucks with materials. Therefore, there is no additional staff or equipment required, as the existing loader and operator can be utilized for this process. Because we are not hauling scrap materials off-site, there is less risk of accidents and risk of our CVR license than some of the other options that involve city staff hauling away material. The only downside of this scenario is that it will take up the most space at the COF, as it requires piles for unsorted, sorted, and crushed materials. However, this can be mitigated by having better controls around the process and crushing the raw material more frequently to keep the pile size smaller. In order for this scenario to be implemented successfully, there's a number of other recommendations as well. First, it's very important to establish a process and controls around using the weigh scale for both incoming and outgoing loads. Now, this hasn't been done consistently in the past, which means it's difficult to get an accurate picture of the volume of material that's being generated and used. Also, it means large write-offs during physical inventory time if staff have not informed stores that they have taken the material from the piles. Second, we recommend setting maximum limits for the piles, which would trigger more frequent crushing for the raw material piles, and either sale or disposal for the recycled piles if we aren't able to use all that we create. This will help manage the amount of space required in the yard. Currently, staff are working on creating a site plan for the COF yard to allocate space to a variety of stakeholders, including utilities, stores, FM, and operations. The intent is to organize the yard in the most space-efficient manner while meeting the needs of all of the users. In order to ensure that staff are dumping the materials, the incoming loads in the correct locations, it's also recommended that maps and signage should be developed and directions given by supervisors during daily tailgate discussions. In order to ensure the quality of recycled aggregates meets all user needs, and specifically that the concrete aggregates does not contain asphalt, the specifications in the crushing tender should be revised prior to the next contract. There were some discussions regarding whether we needed permits for this process in order to be in compliance with the Environmental Protection Act. We have yet to get a firm answer on this yet, which is why it's still a recommendation in the report. However, even if we are required to get a permit, this is still the best option to pursue, and it's likely that the permit would not be cost prohibitive as the Ontario government is trying to encourage recycling of aggregates. The entire process, controls, roles, and responsibilities needs to be fully documented and shared with all stakeholders to ensure everyone is clear on the new controls. And finally, we recommend contracting out the testing of incoming loads, as this requires a qualified person with specialized knowledge, and the volume of work is not enough to justify an in-house position at the city. So we feel overall that this process and the related recommendations will ensure the most efficient and effective use of resources. Are there any questions?
There are some, but just before I open the floor, I want to thank you for the diligent work that you did on this issue, because I know this is something that several of us have been pushing for a while based on information from frontline staff that this was the way to go, and I think your work has finally proven that to be the case. So thank you for that, Councillor Fernandez.
And that was part of what I was going to say as well, but I'll say that after my questions. So I'm really pleased to see where this has fallen, and frontline staff, in discussions I had with them numerous times at Battler Road, showed that that was what was going, the direction that they felt we should go on. One of the points you mentioned was about the environment, and I know that we've set an 8% reduction target. Is there ability for because I don't know if this was included in some of the work that Lori Major did with relation to our climate change carbon footprint and our offset. Do you know if this will be included in that at all?
I can't answer that. I don't know what she has included in hers. Is there anyone else that knows?
Ms. Fletcher?
Through the chair, I know Lori and a number of different staff working on our carbon initiative will be meeting with each one of the divisional areas to look at what they're currently doing and where new opportunities exist. So we'll make sure that this is highlighted as one.
Yeah, okay, I think that'd be great, because I think it would be, we may be able to capture some of that reduction that we're trying to do through the processes that we're doing here. The yard plan, I'm puzzled as to why there was no yard plan when they started moving everything over to from Battler to the Cough. Is that something that because they didn't expect the outcome of this audit to be where it was going, that they just sort of dumped sort of willy-nilly? Or, I mean, maybe it wasn't willy-nilly, but I'm sure there was a process to where it was just deposited, but...
I'm sorry, I can't answer that. I don't know the reason.
Fletcher?
Through the chair, there was a high-level plan when we were looking at relocating the function from Battler to the operations facility, but what I can tell council is through the work that Ms. Tasker has done, and since our Director of Roads and Traffic, Ms. Lusk, has come on board, there's been a much more stringent setup of the property out in the back 40 of the operations facility. The other thing that we had identified was there needed to be much more stringent sorting practices. So that's what's really being highlighted with a much more comprehensive plan for the lands at the operations facility.
Okay. I mean, so that kind of begs the question of, was the sorting not done as well at Battler, although, you know, my understanding from the frontline person who's now retired, that there was definitely, there was a real sense of pride at the work that was being done at Battler, and they were really trying, they felt they were doing something good for the environment by reusing and crushing. Was that something, I'm sorry, this may not be for you, Karina, and may go back to Cynthia again.
I can answer from what I know, and then maybe Cynthia can add on to it. From what I heard from the stakeholders, the users of the material, that it didn't meet everyone's quality needs. The gradation of the size of the stones and whatnot was fine. It met their specifications, but there was additional debris and plastic and things that were mixed in with it. So the sorting wasn't quite up to the standard that they required for some of the applications of the material. So that's, and what I believe, is that it has improved since they've moved to the Cough.
Okay, yeah, and that was sort of what I was, I mean, you never want to assume, but that the location would allow, this location would allow for better controls and better eyes on what's again, with absolutely no disrespect to what was going on at Battler Yards, because like I said, the number of times I was there, the pride in the workmanship that was happening and the camaraderie that I saw there was really reassuring and very positive. So not to say they weren't doing exactly that, but maybe this audit has given us an opportunity for a few more eyes on that process. Is that a good understanding?
Yeah, and perhaps before there wasn't the degree of interaction with all of the stakeholder groups to indicate what their needs were. So it was certainly meeting the needs of some of the users at that point.
Okay. Can I make a comment, or is there more questions to be asked? Okay. So
go ahead.
I'm very encouraged, as the mayor is, that this is the outcome of this audit. I had hoped and suspected that that's where it would go. I think any time that we can sort of reduce our carbon footprint, reuse material here within the city, whether it's aggregates or other materials that we're using, I think that's a real win-win. And I think that although the public may not see this as something, sexy and interesting, I think it really does make a difference. We're not always going out and tendering for virgin material. We're making sure that we're doing the same thing that we're asking our residents to do, and that is reuse, recycle, repurpose products that are here within our city. So thank you very much. I'm really pleased to see these recommendations, and I think it's going to be a win-win for all of us across the board. Thanks.
Okay. Any other comments, questions on this one? No? Okay, let's move on to the next one then, Karina.
All right, so the second audit is the physical inventory of the store's tools crib. The tool crib is a bit like a library. It's a place where staff can go to sign out shared tools that they need to do their work. In 2008, when the COF was built, 3 previously separate tool cribs were consolidated into one location at the COF in the store's warehouse. Staff were then able to efficiently pick up both their supplies and their tools at the same counter each morning, rather than going to various locations as they had previously. Even before that time, however, a database was created by IT to track the location of the tools and who they were being loaned out to. Although the database is still being used on a daily basis to record all the tools that are coming in and going out, there's never been a process to follow up on any of the tools that have not been returned, or a physical inventory has never been done to compare what's in the system to what we actually have on hand. So the objective of this review was to improve those controls around the shared tools and to clean up the database by doing a complete physical inventory. So in order to do this, I consulted with the staff regarding what the current process and controls were. I reviewed the capabilities of the database and organized the completion of the physical inventory. And for this, what we did was we went out in the field as well as in the warehouse using some paper sheets to take note of everything that we did have on hand. And that now just needs to be uploaded into the system. We've discussed the proper financial treatment of the tool cost, and I've recommended a new process and controls which still needs to be reviewed and accepted by the stakeholders. So what was found was that the majority of the tools that are currently in the field will remain there and will be retired from the tool crib. This is because those staff use the tools every day, and therefore it's more efficient for them to keep it on their trucks rather than coming into the tool crib every day to sign them out again. Most of the tools in the tool crib are listed properly in the database as being available for loaning. These are typically tools that are used less frequently and do not make sense for individual work areas to purchase them for their sole use. Not surprisingly, it was also found that more than half of the tools that were listed as being out in the field could not be found. Now, these could be tools that were previously damaged or disposed of, but the tool crib staff were never informed, so they were never retired from the database. But given the lack of controls, it's also possible that some of the tools were taken home by staff. Unfortunately, not all of the tools have a cost entered in the system, so it was difficult to get an accurate picture of the value of these missing tools. However, based on the average cost of a tool of approximately $25 and the number of missing tools, I've estimated the value to be less than $100,000. The cost of the tools would have been expensed at the time that they were purchased, so there's nothing to write off at this time. We just need to remove them from the system. Going forward, I'm recommending some increased controls to ensure that staff are being held more accountable for the tools that they use. First, staff will be asked when they intend to return the tool, which will then be entered into the system. A report will be run weekly by store staff to indicate any overdue tools, and then they will follow up to determine the status of the tool. Management will be informed when tools are retired, whether they are lost or damaged, and when new tools are being purchased. This will help them monitor the tool usage and hold their staff accountable if they have repeated instances of lost or broken tools. As I mentioned, this process will be confirmed with stakeholders and documented. Are there any questions?
Councillor Marsh.
Thank you, Karina. It sounds like this is a good way forward for the tool crib problem. I just wonder if staff have considered other ways to do this rather than a reactionary way again, rather than have a report of overdue tools generated. If we had staff using the tools fill out a report to report any lost or damaged tools, or to check off every week to say, yeah, I still have these tools and they're in good working order. Something that leaves the accountability on the staff person using the tools.
The first thing that you mentioned will be part of the process. So if they do damage it or it gets lost, they will be instructed to make sure that they tell the store staff so that they can retire it from the system. So the accountability will be on them. The checkpoint then is the report that would, any that have not lived up to that accountability, that have not told staff in the stores area that the tool is not coming back, so that they can follow up with it and making sure that management's aware of it as well.
Right, but if I'm using a tool on a daily basis, when am I supposed to return it by?
So when they do sign out the tool, they have the ability, the default is 2 weeks that they can sign it out for. If they need it longer, they can indicate it at the time that they are signing it out. So say it's a job that they're doing over a month time frame, for example. And if they need it longer, then it'll be up to them to let store staff know that they need an extension. In terms of ones that they're using every single day, those are tools that they would be purchasing for their sole use for their division, and they wouldn't be part of the tool crib, so they wouldn't be part of this program.
Oh, I see. Okay.
So these are just tools that are kind of in a shared pool for all divisions to use. They're ones that are less frequently used, that you may not want to purchase them for your sole use.
Okay, thank you.
Councillor Fernandez.
Thanks, Karina. Do we have an understanding of what the total inventory would have been of the tools and the tool crib? Like you're saying, about $100,000 was missing based on your estimate. What would be the total inventory?
So if that's about half, then it would be about 200,000. Give or take, yeah.
Okay, so. Oh, I see what you're saying. I was sort of thinking that there was half missing. I was thinking it's different. The total inventory would have been much higher, and the percentage missing was 50% of that. But okay, I guess in a way it's a little bit concerning to see that 50% of the tools that walked out of stores never came back. And so I certainly appreciate that we're putting some processes in place. When is this being implemented, and what has been the response to date?
So store staff are in the process of updating the database with the physical inventory information. Once that's done, we're going to sit down with the user groups and explain the process to them, get their input on it in case we need to tweak it at all, and then go forward with it. So it will be within the next couple months that it will be in place.
Okay.
Yeah, and I just on your comment about that many walking out the door, like I said, there is a possibility that some went home with people, but I would say the majority of them, this database has been in place for many, many, many years. So tools get broken, shovels get broken, handles get broken off, rakes are no longer, viable. So it doesn't surprise me that many have been disposed of over time. It's just they haven't let store staff know to take them out of the database.
Right. And I mean, certainly, it happens to all of us when we're doing work around our house that we destroy a tool. But it's unfortunate that the reporting didn't happen, because I think that's really important, because then it always looks way more negative to the staff or the people who are using those than it should if it broke and I disposed of it, which would be a logical and appropriate solution for that. Anyways, I'm glad to see that we've put some process in place, and hopefully that will reduce that lack of communication that seems to have happened. Thanks.
Councillor Yanetsky.
when we have tenders come before us for vehicles that's being replaced because you need a new one, there's a number saying that we're replacing unit vehicle number, whatever it is, and they're identified for, I guess, for inventory purposes, which is larger type of costly vehicles basically we have. But when you get down to whippersnappers and augers and hammers and stuff like that, and you're doing inventory, are there going to be like certain serial numbers, or you just get to the point, well, you know, a hammer is a hammer, you know?
They're all barcoded. They all have an individual barcode on them.
They'll have what kind of number?
They have a barcode that you can scan with a scanner on them. Each one has an individual identifier on them.
Oh, okay, so they'll be able to be traced that way, so, okay, because I was just wondering how you're going to be able to do it. Maybe larger equipment, you know, lawnmowers or something like that is maybe fairly easier, but when you get to hammers and screwdrivers, you wonder whether it's pointless or not, so. Okay, I just wondering, that's an interesting approach. Thank you.
Okay, that appears to be all of the questions on that one, but don't see any further ones. Let's move on to the next one.
All right, so the next audit is the status update of the Community Services Administration Review. And the purpose of the original audit was to look at the admin roles in CSD to determine capacity and resourcing needs. And this was due to a retirement in the area at the time, which presented an opportunity to reassess roles and responsibilities. It was found, in fact, that there was extra capacity in some of the roles, while others were completely overburdened. These overburdened roles also lack trained backup, which, as you've seen, is a recurring theme in my reviews lately. At the time, I recommended a number of tasks that could be combined and redistributed amongst staff to balance out the workload, allowing the elimination of one FTE. There were also other process improvements that would help facilitate this. And finally, it was recommended that each role have a trained backup to allow for coverage during absences. So this status update is intended to help hold staff accountable for implementing audit recommendations and is meant to be just a checkpoint. The results of any status update will determine if further in-depth audits are required, depending on the extent of uptake of the recommendations. So in this case, of the 9 original recommendations, 6 have been implemented, 1 is not started, and 2 are no longer relevant due to other changes that were made in the section. Some of the benefits that were achieved by implementing the recommendations included 1 FTE that was declared redundant and has now been repurposed for the new Neighborhood Strategy Engagement Associate this year. Previously, admin staff were the zero-out phone target for other unrelated occupants of the 7th floor. In addition, the Corporate Contact Center was transferring calls to them in error. Both of these things added to their workload. By removing the zero-out target and educating the contact center on which calls to transfer, the number of misdirected calls and associated workload have decreased significantly. All staff now have a trained backup, and although this is not a result of the audit itself, their workload has decreased even further due to the CRA's decision to remove the child fitness tax credit. This program had previously driven a lot of their workload, with citizens asking for tax receipts to be printed. The only outstanding recommendation was related to removing a task from one particular role and redistributing it between 3 other people to help ease the workload. Given other changes in the section, this may not be necessary. However, management will further assess this. So there are no new recommendations and no further follow-up audits are required. Are there any questions?
There do not appear to be any questions.
All right, final one. This is, again, a status update, and this is the Kitchener Utilities and Corporate Contact Center Service Delivery Review. The purpose of the original audit was to examine the options for providing dispatch and alarm monitoring services and recommend the best service delivery model. At the time, it was recommended that all of the non-utilities dispatch work and the monitoring of corporate alarms all be transferred over to the Corporate Contact Center. To facilitate this, staff would be transferred from Kitchener Utilities to the Corporate Contact Center, and the Corporate Contact Center would now operate on a 24/7 basis. Any after-hours KU dispatch would also transfer over to the Contact Center. So the original audit was completed in December of 2012. Of the 18 recommendations, 16 have been completed, 1 is in progress, and 1 is not started. The benefits achieved by implementing the recommendations included improved service levels to citizens. They now can call one simple number 24/7. There's an improved dispatch function and alarm monitoring by staff who are now focused on this task rather than it being done by KU staff as an additional task on top of their normal workload. Processes are now all documented, and staff are happier. They have the latest tools and software to perform these services, and the utilities dispatch staff no longer have to work night shifts. The only outstanding recommendations relate to utilities. They still need to create a business continuity plan for the KU Operations Center, and this can be supported by the Corporate Business Continuity Program, which is underway right now. And they need to continue implementing the key performance indicators. They've started discussions on this, but they have not fully implemented it yet. So there are no new recommendations and no further follow-up audit is required. Are there any questions on this one?
Councillor Fernandez.
Yes, can you give us a little bit more detail about the business continuity plan that you're talking about?
In general, for the corporate-wide or for Kitchener Utilities?
For the specific, how the Kitchener Utilities operations and the corporate contact center.
So the Corporate Contact Center already has their plan, but this is for the Kitchener Utilities dispatch function. They don't have a documented process in place for business continuity, but it will be something that is looked at as one of the priority services when we do this corporate-wide, which we're starting soon.
Okay, so is there an end date goal for that?
I don't believe we have a complete work plan for the overall corporate plan, but it will be in the coming years.
Okay, and just a quick comment. I've been finding that when residents call me after calling the corporate contact center, for the most part, they're pretty happy with the responses that they're getting. They seem to be directed to the appropriate person, or they feel confident that they've been heard, which I think is often very, very important for a resident when they have an issue and a concern. So I still am hoping for that last little piece of where people get the knowledge of, when a work order is completed or when something happens, but I know that's still part of our customer management CRM process. So, okay, thank you.
Any other questions? Okay, if not, that looks like it's it.
Great, thank you.
So thank you, Karina. That takes us through the 4 items that were on the audit status report. There is no recommendation required. These were all here for information, so I'll just take this opportunity to thank you for all of your diligent work on an ongoing basis on these items. I think we have a fairly robust internal audit process as a municipality, and we're not overly staffed in that area, as I'm sure you're aware of, and you pump out a lot of great work, so thank you for that.
Thank you.
So with that, I'll take a motion to adjourn. Moved by Councillor Fernandez, seconded by Councillor Schneider. All those in favor? Opposed? That's carried. I know it says that we would go right into caucus. Let's give people a few minute break if they want to grab a coffee or a stretch. So let's start at 3:10. I think it was just 15 minutes.